Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for May the 11th, 2010. Our first position tonight is going to be in the foreign exchange market. We're going to be looking at the US-Canadian pair. Now, for everybody that's viewed the Forex market outlook for the week, this pair has done pretty much exactly what I expected it to do. We've got a substantial pullback towards this 18-day predicted moving average from vantage point at the 101.90 area. We pulled back today to the 102.10, 102.08. So for tomorrow, what we're going to be doing, again, we want to identify our key levels of support here: 101.90, 102.68, 103.23. So our first position is going to be a long position, a buy off this 18-day predicted moving average. Now there's a couple of concerns here. The predicted medium and long-term differences are both in the overbought territory. So this could push it a little bit lower. However, the strength indicator from vantage point very aggressively hitting lower. This suggests to me we're oversold and we're getting ready for a bounce. Predicted TSI from vantage point, the trigger has hit the overbought level. That again is a concern. Predicted MACD is moving higher, but the predicted RSI from vantage point is pretty much sitting at trend ready levels. Now let's go in and have a look at these short and medium term crossovers to see if we can see what's happening there to give us further insight. Now again, the euro stuff is all starting to clear up, and we're getting a bounce in the equities, all of which is what I anticipated. Now we don't quite have this short-term crossover yet to the downside, so the bias on US Canada is still very clearly higher. Now 101.82, 101.90 has been a very critical level over the last several months. I'm going to pull this up so everybody can see this. Now again, our triple EMA crossover is always the first thing we put up. We want to always make sure we look at the longer term view, medium term view before we start getting into short term trading. So what we can see here essentially is the triple EMA crossovers contain the market going back all the way into late January, early February. So we've got this crossover to the upside that's taken place here, albeit in very volatile markets. It's still we do have a fresh buy signal, somewhat of a fresh buy signal. We've made a big move here all the way up to the 107, as high as 107.20 last week. We've now retraced that entire amount. So US CAD has given back all those gains, but again, we're back at the 18-day predicted moving average from vantage point. We're going to use this as an opportunity to reset our buy positions and look for that continuation of a move back to at least the 104, 105 area. That's what we would anticipate. Now, going to the daily report from vantage point, our final indicator here, we can see that the neural index is turned down after numerous days higher. That's pretty much a given, respecting the fact how high it's moved. Now for tomorrow, we've got 101.82 as our low and 103.47. Now our 18-day predicted moving average again comes in at 101.90, 101.92. So that's the area we want to look at getting into our buy position. Stops below the 101 area. Now again, we want to leave room for market volatility because I still expect a volatile week ahead. But for now, we're going to stick with those buy positions off the 101.90. So as soon as we pull back towards that area, we're going to use that to get into longs. Now that's our first position for tonight. Now our second position, we're going to go into commodities. Now what we have here using the Vantage Point software, we have what appears to be somewhat of a reversal forming in natural gas contracts. I've set this here up so everybody can see this. This is the short-term crossover from Vantage Point. It's moved to the upside. Our strength indicator is moved above the zero line and it's moving higher. Our predicted medium and long-term differences are rolling over to the plus side. All of this is a very good indication. Now our predicted true strength indicator from Vantage Point is sitting right on the zero line, which is trend ready. So now our predicted MACD sitting just above the zero line, also right on the trigger. Predicted RSI, it's sitting there. It's a little on the high side, but I think things still look pretty good there. So let's go into our daily report. We've identified that we've got a potential trend reversal here forming in the natural gas contracts. We've now identified that we want to buy it in the short and the medium term. Now let's have a look at the daily report. We've closed at 417. Our low for tomorrow is 405 and our high is 430. Second day in a row our neural index is turned to the upside, all of which again, a very good sign that the natural gas contracts are going to continue their move back up towards that $5 range. Now again, we're going to go in, we're going to set this back up on our triple EMA crossover just to make sure we don't want to miss anything here in the medium and the longer term. So we can see here that we're running flat. All three of the Vantage Point predicted moving averages are stacked on top of each other, with the short-term crossover slightly to the upside and the medium-term crossover from Vantage Point also getting ready to follow here. Now we're going to go in here and have a look at this medium-term crossover just to get a better look at it. So we can see right here that the medium term, the short term is already crossed to the upside. The medium term is getting ready to do that. Our predicted medium and long-term differences are crossing over the zero line from negative territory, which is suggesting a sell. So once we move above the negative area into the positive, that's suggesting that it's going to turn into a buy signal. So we're going to go with longs for tomorrow, again off this 18-day predicted moving average. Now again, looking at that 18-day predicted moving average, it's sitting flat, so we want to identify the key level of support right now so everybody can see this. Now going into this, we can see that they're all stacked: the 18-day predicted moving average from Vantage Point, the 8-day predicted moving average, and the 3-day predicted moving average, all sitting between 406 and 408, suggesting that a significant amount of support is building in this area. So again, we want to stick, by identifying that, we want to stick with our buy position. Now our third position tonight, we're going to be looking at orange juice futures contracts in the softs. Now looks like we have some opportunity potentially forming here on these orange juice contracts. We can see that the strength indicator from Vantage Point has crossed the zero line to the upside. The medium term and the long term differences are also moving above the zero line. Our predicted true strength indicator from Vantage Point has crossed over the trigger just below the zero line. This is a good indication of a move higher is coming in this. Now let's have a look at the actual crossovers on the short, the medium, and the long term to see if this is confirming that we're getting a move, potentially getting ready for a move here. So the short-term crossover to the upside has taken place. That looks good. Now looking at the medium-term crossover, again, we want to look at more than one time frame here. Medium term is getting ready to cross over here also. So we've got the short and the medium term suggesting that the orange juice futures contracts are going to move higher. Our predicted differences are turning. So let's go into the daily report now. We've identified that we've got the potential move in the short and the medium term for a move higher in orange juice. Now what we want to do, is come down to exact prices. So we've closed at 137.05. So for tomorrow we're going to be looking for a pullback towards this 135.68 area, and then a potential move, to the 137.42. Now this looks good here. We've had 4 consecutive down days with the neural index, and we've just turned positive today. So that's a very good indication. We can see that the short-term difference has turned positive. The medium-term difference, predicted medium-term difference, I should say, has also turned positive. The long-term is still negative. Now we can see that by looking at the crossover the crossovers on the chart, but there's still some good opportunity there, and it looks like the potential to catch this thing as it's turning. So again, with that close at 137.05, we can also see that what we're going to do here is, just before we close this out, we are going to put the triple EMA back up to identify our critical levels of support in this particular case. So in our stops on this trade would be below the 134.34 area, the 18-day predicted moving average. At 137.05 though, we can see that the predicted moving averages are basically all stacked on top of each other, much like our other trade, from 134.75 trailing all the way down to 134.21. So everything looks good there, also for the orange juice contracts to move a little higher. So those are the positions for May the 11th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.